Hey traders, hope you're doing fine. I wanted to prepare this video to go over with you about what's happening right now in the world and how you can trade safer. We're going to start right away. We are going to start with the crude. I'm saying crude more because the crude is going to have the biggest impact, or technically speaking, should have the biggest impact. You know me, I'm the Elliott Wave fanatic. So let's look what Elliott Wave is telling us. I'm looking at this move 2020 to 2022 as a 5 leg move. From there, we are seeing a pullback. But for me, this is not a complete move. I'm counting this as just a leg and that we are now looking for the B leg pullback. Just because of what's happening in the world, we need to have a little bit more options. Short term, we want to see a push higher. Ideally, we are just going to see the ABC like this over 38.2, so let's say 85, and from there to see a continuation of the bearish decline. Because the things with Iran can escalate even further, we need to be prepared that instead of just seeing a move towards 38.2, so around 85, that we may see even stronger reaction in crude towards 100 or even higher 110. In that case, I wouldn't just use a simple A, B, and C. I would more go for a complex correction and look at this as a double tree. For me, what's important is that crude is going to react a lot. And because of crude, we need to take a look at the US dollar because for every move, let's say 10 to 15% in crude, we can expect to see a higher US dollar. This is the count that I'm tracking for a long time. For a while now, I'm trying to find a reason to call this A, B, and C completed. And to be honest, what's happened over the weekend could be that catalyst. I'm definitely not saying that US dollar is going to go straight away to 115 or things like that, and that you should completely shift your structure. But for me at the moment, I want to be more bullish on the US dollar. Of course, that will all depend on the idea of how long this war is going to last. But for now, I'm looking for the 100 as the next level of interest for myself and a little bit higher. And if you look at the US dollar to go bullish, definitely we need to consider what? Euro USD to go bearish. Same story. For a while, we were looking for the reasons, a catalyst that will tell us, okay, the wave C is priced in and that we are going to see a push higher. I'm not going to make any strong predictions just because that's a waste of time at this moment. But what I want to see is at least a return to 115.80, so 115. And from there, we'll see what to do. I'm want to track this as a potential 1, 2, 3, 4, and 5. And only after that, you can start building a larger positions towards the downside at any pullback. But till then, all I care is that 116 to 115 range. Pound dollar, similar story. Even the pound dollar looks a little bit better in terms of like if you start counting, you have 1, 2, 3, 4, 5. Definitely not that strong impulsive structure, but still you have a 5 legs. And here I would love to see a drop down to 130 next. That would be ideal for me. Short term, we may see a potential pullback here just because pound today tested the support around 133.43 and found some support. If we want to see a further decline lower, we need to see at least a daily market closing below the support, and from there we can look for a further push down. Just because this can easily become some sort of a leading diagonal, and if that's true, we can expect to see a deeper pullback before market push down. But for right now, I'm more bearish in the pound dollar. Aussie dollar is the only pair for where I'm bullish, where I can say, okay, let's go, let's sell all majors. Why? Just because when you look the structure, it look ugly. I'm counting this as 1, 2, and current move I'm counting as incomplete wave 3. From this wave 3, we have 1, 2, 3 legs completed, and we are in the wave 4 of the wave 3. If that's the case, I want to see just shy move lower towards that 23.6%. That's at 23.6 of the entire wave 3. And from there to try to pick up some long positions. Of course, we are in the wave 4, so we need to keep in mind that market can consolidate, create some sort of a triangle, or go for a little bit more complex correction. But since in my view, wave 2 was a little bit more complex correction, definitely here I would love to see a simple A, B, and C or a triangle, and from there to see a continuation of the bullish movements. Dollar yen is something that I'm not sure. Like, I didn't change the count for years. I'm still counting this as A. I hope that this is the end of the wave B, but what happened, we need to figure out that dollar yen will react. And if you start looking here, this move looked like a three-leg move. So I want to see some sort of a confirmation before I start to look for short positions. But definitely we should hold below 159.42 or more importantly below 161.96 if you want this count to work. I'm not going to say that market must return to, let's say, 138. All I care at this moment would be to see price back below 152. That's all that I care about. And from there, we can see what to do next. But go on the smaller time frame, wait for some sort of a confirmation, and if there is a chance, you can try a small position. Like I said, either against this part, against most recent high around 162. For me, the most interesting pair at the moment is silver. I'm not sure why. Just because you see in my account on Twitter, definitely, where I'm looking at this as larger wave 4. Market done a 5-leg move. This looked like a simple flag. So simple zigzag 5-3-5. And market is trying to push down. So I'm not sure why, just because this should move higher, at least because of what's happening in Iran. But I would love to see price back to 40. For me, that's that play that I'm looking for. Of course, from 40, that could be a great massive buy, but at the moment we are at 87.78, so definitely not something to talk about right now. Looking for a confirmation and any pullback plays against here, and more importantly against 121.56 would work out really good. Crypto is something that I'm not 100% sure right now. Like, at the end of the day, on higher time, I'm considering this as a correction. Is this correction complete? Not really. When that's going to happen, we need to wait and see. We go on the smaller time frame. This move here look impulsive. Here we have really nothing more than a triangle. So nothing more than a triangle. Either this is going to take 69.87, go a little bit higher, and then drop down before we see the end of A4, or we are going to drop down right away. Whatever happened, I'm more bearish short term. When I say short term, I mean month or things like that, because this is a 4-hour time frame. I believe that this year will be really great for a lot of assets, just because we are seeing a strong market reactions across the board. And this is the time when you want to start building your position, not right now, this moment, but during the next 2 to 3 months. We are going to see a lot of strong movements, a lot of strong clients in the market that we should be using in our advantage to try to get into positions early. Okay, guys, this is all for today. I hope you liked this short video about what you need to know and understand. What I want to say before we end is that during these times, you don't want to rush the trading. If you want to trade, it's fine. Go a little bit smaller when we are talking about the risk. So risk 30% of your normal risk and you should be fine because we know that we can expect to see a little bit of higher volatility. Play safe and you should be good to go.